Hello, listeners. Welcome back to the weekly fundamental podcast. As usual, I'll give you a quick update on markets and stock picks from our research team. So let's begin. Last week, US stocks fell and snapped a 3-week winning streak as data showed that consumer sentiment dwindled in early July. After moving in a range for more than a month, the Indian market finally resumed its uptrend and hit a 52-week high. It closed with a weekly gain of 1.5% amid positive global cues, good start to the June quarter earnings season, and supportive macroeconomic data. Going forward, Indian markets would keep an eye on US economic recovery and signals from the Fed, commodity prices, pace of vaccination process in India, unlock measures by various states, GST collections, monsoon development pan India, and consistency of reforms from the central government. We expect FPI flows to India to remain volatile in the near term due to the US Fed monetary policy and rising crude oil prices. The recent uptick in crude oil prices hurts India's external accounts. This can lead to depreciation of currency, thereby impacting the foreign inflows in the Indian market. Moving on to the top stock picks from our research desk. Our pick of the week is ITC. ITC witnessed month-on-month recovery in cigarette business during fourth quarter of FY21. Even FMCG business witnessed continued recovery in discretionary or out-of-home categories. ITC offers a combination of inexpensive valuations, healthy dividend yield, and the promise of robust growth in FMCG. We like the stock and recommend buy with fair value of Rs 257 per share. Now, from capital goods sector, NHAI expects to increase the project awarding momentum with expressways dominating the mix. In our view, the road sector is in a much better situation versus the past year in terms of strong order book, deleveraged balance sheet, better control over working capital, improved labor availability, and execution run rate. We expect execution of projects to ramp up from financial year 22 onwards post monsoons. Our preferred pick remains Dilip Buildcon with a buy view target of Rs 630 with 11% upside. While KIE prefers Dilip Buildcon, in this sector we also like KNR Constructions and PNC Infratech, but they are trading near or above fair value. We also like NCC, which is not covered in KIE report. We maintain buy on NCC with a target of Rs 105 and 11% upside. Next, here's our view on TCS. TCS's headline revenue growth missed consensus estimates due to the drag from India business, but the underlying growth was healthy. TCS will capture more than a fair share of core and digital transformation deals. We increased fair value to Rs 3375 from Rs 3250 earlier, valuing the stock at 26x June 2023 EPS. Next is Infosys. Infosys reported strong 4.8% sequential revenue growth in constant currency. EBIT margin was impacted by higher subcontracting costs. Infosys is well equipped for industry-leading growth in the medium term. We raised fair value to Rs 1,710 on rollover and maintain buy rating. Then Wipro. Wipro reported strong revenue growth of 12% in constant currency terms and was 2.6% ahead of our estimates. EBIT margin decline of 320 bps quarter on quarter was sharper than expected. Revenue growth guidance of 5 to 7% quarter on quarter was in line. We believe turnaround is priced in. The stock trades at 24x FY23 EPS and fully discounts growth potential. We maintain a reduced rating. Guys, that's all for now. See you again next week. Happy investing.